2025 started off with some much needed optimism for the overall economy. As the current administration has moved forward with their agenda, the economy is starting to show signs of investor uncertainty. Today we highlight the Consumer Sentiment Index and how the current trend may impact the multifamily industry. As I've had conversations with investors across the country on the economy and the recent trade policies, many of their opinions are being influenced by the uncertainty in the bond markets, the weakening US dollar, and the evolving trade war. The United States delivered 585,000 units in 2024 and is projected to deliver 410,000 units in 2025. Although completions are declining, the United States will deliver 18,000 units more than the trailing 6 years on average, dating back to 2019. To couple the large number of completions, absorption was extremely strong in 2024. The United States experienced net absorption of 663,000 units in 2024, the second highest calendar year total on record, trailing only 2021. Due to the rise in inflation expectations and the recent volatility, the falling Consumer Sentiment Index is here to stay. The Consumer Sentiment Index has been a decline since the start of 2025. The most recent headline index declined again in April 2025 to 50.8, the lowest level seen since the depth of the pandemic. There are many factors influencing this decline. First, many consumers are expecting unemployment levels to rise, and some expect levels to rise near what we saw in 2009. Also, the fight on inflation still remains challenging as tariffs impose a threat. At this time, the effect of tariffs is still a wait-and-see game due to the quick reactions and the changes in policy. Many blue-chip economists are predicting an economic slowdown, with many showing a potential negative GDP in the second quarter of this year. Historically, there's been a correlation between consumer sentiment and household formation. As market conditions tighten, then people are less likely to leap and rent a new apartment, thus keeping people in their current living situation. We've had 4 quarters of solid demand. The rental and vacancy levels were projected to drop 5.1% based on 2025 forecast. When looking at this trend in consumer sentiment since December of last year, this could be the canary in the coal mine that could be telling us to rethink our outlook for multifamily demand. Investors must dig deep into fundamentals and trends. We still face a lingering housing crisis, which will drive demand long term. Many markets are still facing elevated in-migration, which will counterbalance the following Consumer Sentiment Index. Dallas-Fort Worth is a prime example. Dallas-Fort Worth will deliver 100,000 units dating back to 2023, including the projections for 2025. DFW is also seeing an estimated 100,000 people move into the metro area on an annual basis, offsetting new unit deliveries. As we've experienced with this trade war, policy could shift and the entire landscape could change by tomorrow. This is the challenge investors face. The long-term outlook remains very strong, and 2025 will be a pivotal year for multifamily investing.